A recent report by the Central Bank of Nigeria indicated that bank loans to private sector increased to 35.7 trillion naira as at the end of 2021, increasing well over 5 trillion naira. A close analysis of the monthly credit value shows a continuous increase throughout the year, expected from February, and while credit to the sector dropped by 100 billion naira, the figure fell to 30.5 trillion naira from 30.6 trillion naira recorded in January. This report is indicative that the Nigerian lending sector had become accessible and available to private sector, even as the economy tries to find balance from the effect of COVID-19 pandemic. Financial sector, particularly the banking sector, has been a forefront of enabling this access to real sector as part of policies of the CBN. Well, let's do an overview, even looking at peer-to-peer lending and all of these issues as it relates to the financial space. I have the founder and the chief executive officer of P2Vest in the studio, Mr. Austin Bolusoro. It's good to see you. Good afternoon.
Good afternoon. Thank you.
Yes. I want to start with the fintech industry as we move on in 2022. Let's look at how will peer-to-peer lending impact financial inclusion. Of course, that's what everybody wants to achieve, and of course, access to funds.
Okay. Yeah, peer-to-peer lending, as we see it today, is going to make a lot of impact on the financial sector and on the economy in general. Because when you talk of peer-to-peer, you are now looking at not very formal type of lending or borrowing from a bank. You are looking at individuals lending money to each other, all right? And you are looking at probably an SME lending money to individuals. And in this case, you're looking at people who generally will not be able to access funds from a financial sector, now getting access to funds from individuals who have funds that could be made available. We find that when you deploy technology that enable those people to now connect to each other, we're going to see so much growth in this sector as we begin to see the improvement right now.
But there's been rise in loan apps intruding into non-users and user privacy. That is also something that is very important. What do you think can be done to this recent development?
Yeah, so of course, it depends on how you look at it. This has been a major issue, and there have been a lot of talks around increase in, people breaching the privacy or lenders breaching the privacies of borrowers. But then we also need to look at it from the point of the lenders. While it is not a good thing for a lender to breach the privacy of borrower, and it's something we should discourage, and it's something that we do not do as P2Vest. We are not really lending per se. We are providing lending technology, but we don't encourage our lenders to do that. But you have to look at it also that the lenders access funds from somewhere, either from banks or from individuals, and these funds need to be paid back, and they are paying interest on the fund. There's a cost to it. When people take such money and never return it, it puts that pressure on the lender, and that is why we are seeing those kind of reaction. Though there are some of these lenders also that have not done enough due diligence before they give out the loans, and that's why we are seeing the kind of reaction they are giving to the borrowers. But there's some kind of carelessness also from the part of borrowers who just, because of the desperation of trying to access loans from these lenders, do not care about the privacy of their data and the kind of data they give out to these apps that lead to those kind of breaches that we're seeing.
Technology. I always think about infrastructure when we talk technology. I don't know if you want to talk about that. Do we have that right infrastructure also in place?
Yeah, so there is the barrier to entry as far as infrastructure is concerned, I think is largely addressed today globally, okay, by the availability of what we call cloud systems. All right, so you can be in Nigeria and be using systems that are hosted in the US, in UK, or anywhere. So infrastructure is not so much of a problem to us because those infrastructure are made available across the globe. And I think the kind of infrastructure you may say can be a barrier to us locally is the internet infrastructure. And that, again, is made available today through the MNOs. We see data is available now. A lot of people can access data. So long as you can get onto the internet, you are likely to be able to access infrastructure that is just there in, you can look at Amazon, AWS, you can look at Azure from Microsoft, and so many of them, right?
Interesting there. Now, there's a fast rise digital transformation. Let's agree to that. We've seen that happening. But what would you say makes peer-to-peer lending thrive in a shared economy?
Okay, peer-to-peer lending is thriving in the shared economy, and that is what P2Verse is really focusing on right now. There's a lot of, lending app out there, and people doing all kind of lending solutions, but we have decided to develop peer-to-peer lending platform. And the reason why this is thriving in our environment is looking at, you have to look at our culture. We have a kind of communal culture. We want to be able to help each other. We want to bail each other out. And one of the features on our app, on our peer-to-peer lending app, is the Bail Me feature, where if you are in need of fund, you come to me as a friend and you say, Austin, can you bail me for 20K? And I say, just get onto P2Verse and request from me, and I can release that fund to you. So that is happening in a formal way already in, culturally in Africa and Nigeria. We bail each other out. Now what we have done is to develop an app that could let people do that and keep a track of it, because sometimes you give money to people you even forget, or how do you get it back? So we have automated the process where we can help you go to the person's account and remove the fund, and where it is not available, at least the system is going to be sending some kind of reminders to you and to the borrower that, okay, there is this exchange of funds between the two of you. So we're going to see a lot more of this kind of technology going forward.
Now, you're already talking so very much, I see that talking about peer-to-peer, bailing people out and all of that. I can imagine when it comes to money. But as a founder of a fintech company, now what would you say are the limiting factors to your kind of business?
All right, we must say that the fintech industry in Africa and Nigeria especially has seen tremendous growth in the last 5 years. There's a lot that has happened, and some kind of data that we have seen. Last year alone, VC funded fintechs, we saw 6 billion that have coming to Africa for funding of startups, and this is major improvement that we can see, encouraging, and these are FDIs, and Nigeria is having a major share of it. Nigeria is actually #1 now in Africa in terms of fintech funding. So we see a lot of this happening, and there are so many startups coming up, but there are these limitations. There is the kind of government regulations that need to be in place to help to protect this fintech and to encourage people to do more, and to help these businesses to thrive, and to also help protect investors' funding, those investors that are coming in, to encourage them. And then there is also our ability to actually now produce the necessary human capacity. All right? So we have this problem of, talent drain, as you may call it. A lot of people, technical, skilled people, as they just begin to get into this mainstream, and as they begin to, develop their skills, then suddenly you see people are now moving to UK, to Canada, and to other countries. And, we need to find something to do about that, all right? Because for us to continue to develop our fintech industry and to continue to innovate, we can't do that without the necessary human capacity. And that is something that is really a limiting factor right now.
I'm also thinking about the regulators and government agencies. Are you getting enough support from them, before we move on? Are you also, because you need support for this kind of business.
Sure. I did mention about government regulation and all that.
Yeah.
Of course, so there are some kind of regulations that are in place already for different parts of the fintech business or industry, as you may call it. There are some that are governed and released by the central bank already that actually, especially payments. So there's a lot of fintech that are focused on payments, and there are regulations around that the central bank has put in place, licenses you need to have, those things are in place. But fintech is broad. There are different areas that fintechs are focusing on. So number one is payment, and I think number two right now is lending, and then there is savings, and there are other different kind of products that are coming out. So having something broad that will help the industry is what we need to look at, that we cover everyone and provide some kind of support for the industry, not necessarily to govern people and hinder people in some cases, as we have seen, but really to provide the necessary support that we help businesses to take off until they get to that point where they can attract the kind of investment that we are seeing already happening now.
Great stuff there. Now, in what way now can government, let's say government now leveraging on the fast rising fintech, at least to solve some social economic problems?
Of course, I mean, already we see, we're saying Nigeria had about 1.3 billion FDI or funding for fintech last year, and it could be more. Already this week, we saw the report on Flutterwave already attracting another about 200 or so, $250 million, now valued as the number one fintech in Africa at 3 billion. And so that is significant, and we're going to see a lot more of those kind of things. We need government support, all right? We need to be able to see how we can drive and develop companies that we grow and become large. And these companies, I mean, they are already employing people. So you're going to see companies, fintechs that grow and begin to create employments that will help the economy. And they're going to continue to have that kind of major impact as we see in other climes. We see that in India. I mean, look at in the US today, the number of fintechs that are springing up in San Francisco, and all these are impacting on the US economy. We're going to see a lot of it in Nigeria if we can see how this particular industry can be developed, can be given the necessary support. We will solve a lot of problems in terms of job, in terms of FDI. We're going to see a lot of things happening. And in fact, some of the things, some of the technologies that we are buying today, that we go and spend hard dollars to buy from abroad, we need to empower people. We need to encourage our people to start focusing and researching on those things. And we see that many of these things can be developed locally.
Yeah. Interesting stuff. Now, one of the risks in this kind of business, of course, is high default rate. It's really worrisome. Now, have you been able to minimize this risk and, of course, contain the situation?
Yeah, so yeah, exactly. That's always the point. When you talk of lending, then you look at default rate. How do you manage default? But one thing that is clear is when you look at our own business as P2Vest, we're a technology company, all right? We are providing peer-to-peer lending platform. And what we do is we allow on our app for lenders to set their profile and put fund there, and borrowers come in and request for fund, and the lenders take the lending decision and approve the loan. So in that case, it's not P2Vest that is actually taking the risk, all right? But we try to provide the technology that should help our lenders to minimize their default rate. So default is always an issue, and that is why we see the kind of reactions that we see from some lenders who are publicly, harassing borrowers and, breaching their privacy, because it's what can kill any business. Even a big bank will be killed if you have high default rates on loans. So what we try to do is to limit, the exposures of our lenders on the peer-to-peer platform, the P2Vest platform. We try to limit their exposures by making sure that we have a strong algorithm that does the selection and see how we can filter out people who are not qualified before we present them to our lenders. We will have done credit bureau check, we will have done BVN check, we will have done even address verification in some cases, and then we do statement analysis, and all this we do, and then we score the borrower and present to the lender. But ultimately, we leave the decision to lend. We leave that to the lender on our platform.
Interesting stuff. Let's now wrap up this discussion. Now, what's your prediction for 2022 outlook, particularly with focus on loan and, of course, the fintech space in Nigeria?
Yeah, my prediction is we're going to see a lot more of the lending platforms that we are seeing now. The platforms are going to grow. We're going to see some kind of interest from foreign investors that will come in and, invest in these companies, and we're going to see more newer ones that will come in and also do something new that's probably some of us have not thought of. So this industry, I can see that is going to grow, but I also believe that we're going to see some kind of regulatory interventions this year, because there have been a lot of talks about this, and I think there's some things in the works already, so we may see some kind of interventions. But overall, I think we're going to see growth in the number of Nigeria that can access loans. From the EFINA report that we saw last year, they've said that in 2019, 2018, number of Nigerians that could access credit were just 3%. And then in 2020, it's moved to about 12%. And you cannot remove the impact of these lending apps there. Though the banks have increased their own lending positions also, but these fintechs have provided platforms, apps that people can just access everywhere, and they are able to make requests for loans, and we're going to see more of that this year. So likely, access to loan in Nigeria, that number could go as high as 18-20%, possibly by the end of the year. Thank you.
I pray we can be able to accommodate that if it happens, because I wanted to ask, just on the lighter note, that the effects of COVID-19 was felt across all businesses. Did you feel it in your own business, and does it look like things are coming back to normal now as we move?
Oh, yeah. I mean, every business felt the impact of COVID-19, and then in the lending space, we felt it because lenders tend to slow down at the time of COVID. People were staying at home. A lot of people were not running businesses. Some people, most workers were not even going to work. Yeah. So the need and justification for taking a loan was not really so much there. That pressure wasn't there, and lenders want to be sure who is going to get back to work, who is not going to get back to work, who is going to which business is going to survive or not. And so trying to manage that risk came into place during COVID, and everything had to slow down. But now things are coming back to shape. Everything is moving up again, and we are seeing a lot of requests, and everything is growing back.
I must thank you so much, Mr. Austin Abolusoro. He is the Chief Executive Officer and, of course, the founder, P2Vest. Thank you so much for spending your time on TVC News. We'll keep a tab on you, and of course, I'd like to have you again to talk about issues around your sector.
Thank you.
All right. Thank you.